Hi, this is Jerry Howell from Assured Concepts Group with an educational economic update for May of 2018. In this month's video, I'll discuss some of the major headlines that influence markets in April. I will also provide insight into what these developments could mean for you as an investor. Market volatility continued in April, but for the first time in several months, all three major domestic indexes ended in positive territory. The Dow and S&P 500 each gained 0.3% in the month, although both indexes are still down for the calendar year. The Nasdaq added less than 1.1% but remains up 2.4% for the year. The start of corporate earnings season was easily among the most important financial occurrences last month. By April 30th, the majority of S&P 500 companies had released their first quarter 2018 earnings reports. Much of the news was positive, as 79% of the companies exceeded expectations for their earnings. In fact, by some measures, this earnings season is the best on record. However, while corporate earnings results were strong, stock prices did not experience large jumps in response. For companies that beat their expectations, the resulting stock increase was on average only 0.3%. Why wouldn't strong earnings cause large equity increases? This may have happened in part because investors saw any quick stock price increases as opportunities to sell for profit. But with trade wars, treasury yields, economic growth, and more, investors had many topics on their minds. Let's briefly talk about some of these topics affected markets last month. The possibility of a trade war between the U.S. and China worried many investors in April. Early in the month, one poll showed that over a third of financial strategists believed that a trade war was the biggest threat to an otherwise expected stock rally. By month's end, U.S. Treasury Secretary Steve Mnuchin was planning to visit China in hopes of preventing the trade tension from escalating further. Yields on U.S. 10-year treasuries were also a topic many investors tracked in April. For the first time since 2014, yields rose above 3%. This level is a psychological benchmark because rising above that rate can cause investors to leave riskier vehicles such as equities to move back into treasuries for safety. But by April 27th, yields had dropped back below 3%. That same day, we received the initial reading of first quarter gross domestic product, GDP. The economy experienced a 2.3 annual growth between January and March 2018, slower than the fourth quarter of 2017, but faster than analysts expected. The first quarter each year is traditionally lower than the rest. Looking back at April, both the economic data and headline-driven news seemed to mimic the monthly performances the index posted. There was a lot of action and talk, but the end of the result was to move just a little bit, but seemingly in a positive direction. That's it for the month's educational economic update. Please remember that nothing we talk about here is a recommendation. If you would like to discuss your personal financial situation, please give us a call at 847-426-1077. We'd be happy to talk to you. Once again, this is Jerry Howell with Assured Concepts Group for the month of May. Thank you very much. Have a great day.
If you would like to discuss your portfolio or personal financial needs, please contact us at 847-426-1077. Nothing stated in this presentation should be considered an offer of a securities product nor an investment strategy. The advisors of Assured Concepts Group offer securities and investment advisory services through FSIC. FSIC is a member of FINRA and SIPC. If you would like to discuss your portfolio or personal financial needs, Please contact us at 847-426-1077. Nothing stated in this presentation should be considered an offer of a securities product nor an investment strategy. The advisors of Assured Concepts Group offer securities and investment advisory services through FSIC. FSIC is a member of FINRA and SIPC.